Welcome to another stage analysis video. It's Sunday the 7th of April 2024. Lots to get through as always in the weekend video. I'm going to try and keep it relatively short, but lots to get through. So going to start off with going through some of the weekend's US watchlist stocks before getting into the more regular content. So starting off here with SE, I thought it would be a good example one to start with, as it's potentially at what we call the stage 2 backup entry point. It may not be, but it's right at the point after the stage 2 breakout where it's pulled back into the stage 2 breakout level and potentially attempting to rebound. So one way we can try and capture these kind of moves as a stock moves into potential early stage 2 and then starts to pull back towards the breakout level and then starts to turn again, is we can drop down to a lower time frame. So if we drop down to, I normally start with the 195 minute, which is half of a day, then we can do stage analysis on that time frame. You can see on that time frame it's more of a stage 3 type environment there. If we drop down to a 2 hour, you can see it's actually more stage 1 on that. We've had the stage 2, the stage 3, a minor stage 4, and then it started to base again in stage 1 through here. So potentially would start to draw some levels through here. So we'd be looking for a stage 2 breakout attempt through this kind of area. So this is one of the techniques you can use. You can even drop down to a 1 hour or a 30 minute if you want. I tend to prefer the 2 hour chart on the intradays and the 195 minute. Do drop down to the lower levels when it warrants it, especially in the more liquid names. As you can see with this one, it's had a good intraday stage 2 move and free, and then rolling over here and starting to set back up in stage 1 again. So we've got a clear level here around the 56 to 57 area. So it does start to make a strong move through this area on some stronger relative volume. We use the same technique as on the weekly chart. We're looking for a bigger volume move on the actual breakout itself. Don't always get it, but generally on an intraday bar it's much more visible than you would see on a weekly bar. So if we get this kind of move through here, then this is a potential intraday stage 2 breakout attempt, and hence that becomes our backup entry point. So if we look at that on the daily chart through here, that would be around this level on here, and then on the weekly chart we can look at that again. See, that would just be a minor move through this kind of area here. So that would be your stage 2 backup entry point as such. So you can see it's had a stage 4 breakdown through here, gap down on earnings back in August there, but it's since gone sideways. Wyckoff structure through here, so selling climax, automatic rally, secondary test type move, and then had an up thrust, then formed a spring back in early January here before starting to move out in phase D of the structure, then moving on into stage 1 and into early stage 2 here. So now, as I said, potentially at the backup entry point, not yet over the Mansfield relative strength 0 line here. Still got some overhead resistance involved with this one, as it did come back in. So if we use an Ichimoku cloud, for example, here, you can see where that overhead resistance potentially is, which is just around that $60 level or so. So if it does start to clear through that area, then potentially we get more of a major stage 2 continuation at that point. But at the moment, just testing moving into early stage 2 and potentially at the backup point. So I thought that was an interesting one to start with, as it's a good educational one on the secondary entry point for the investor method. So NVDA, another one that's been strongest, well, one of the strongest in the market, but the major large cap leader since the early part of 2023. Been consolidating over the last month, as we can see, since the selling climax or the buying climax up here, automatic rally, secondary testing, started to form a base. So potentially phase B of the structure at the moment. This could turn into phase C. Could see a spring type move back up towards the highs again. Could yet break down, but as you can see, between the +1 and the -1 ATR level at the moment. So completely neutral position at the moment at the lower end of this recent base structure. So still watching how this develops. Be looking for a break above the +1 ATR level within the base for this one ideally, but if it does break to the downside, then 50-day MA test on the cards there potentially. We look at it on the weekly chart, you can see been in stage 2 for quite a while now, had a brief dalliance into stage 3 before making a continuation breakout again. So still pulling back in the later part of stage 2 at the moment. DXCM is another interesting one here at the moment. Actually, if we go back, so with NVIDIA, so we now have, right, where was I? Back to NVIDIA here. So I just wanted to show you the weekly chart of this, which is available on the Stage Analysis website. Now we have what we call the Stage Analysis Technical Attributes charts, which shows the weekly chart of at the moment, the S&P 1500 stocks with the demand sort of relative strength below, the breakouts and breakdown levels, and the Stage Analysis Technical Attributes score, which goes from 0 to the 10 and looks for the 10 characteristics that we look for in a stage 2 stock. So if it's got 0, it doesn't have any characteristics. If it's got 10, it's got 10. It's a fairly simple way of looking at stage analysis, and gives us a way of scoring stocks and how they are in the market, and then we can use that to create percentages for the industries and the sub-industries. It gives us a load of great data, so we can compare stocks at the moment. SMTC, for example, being the leading stock at the moment in the semiconductors groups. We use the GICS group, so there's 2 semiconductors in that. There's 163 sub-industries of that. You'll see in the information technology group here as well. You can see how all of the various different stocks rate against each other with their relative strength and their SATA scores. So at the moment, Micron has been leading for the last few weeks, and NVIDIA it's a little bit down because its SATA score is currently an 8. So as you can see at the moment, so it has pulled back, was a max 10 a little while ago, but as it's been consolidating over the course of the last month here, you can see its technical attributes have drifted down, but still in what we call the strong zone. Anything in a 6 or 10 range is the strong zone, 4 to 5 is neutral, and 0 to 3 is the weak range. So you tend to find stage 4 stocks in the weaker range, you tend to find stage 2 stocks in the strong range, and those in stage 1 and stage 3, or when they're basing, tend to be in the 4 to 5, or you get little drifts above and below. It's not totally based on the stages in that way. There's going to be, you can't just say something in the strong zone it's in stage 2, as you can be in any of the scores in any of the stages, but there's characteristics of each, and you have a tendency when you're in stage 2, as you can see here. So this started to break out into stage 2 through here, for example. So if I draw a line down there, you can see what the score has been during stage 2. We had a little dip into stage 3 here, so you can see as it started to drop back down into the neutral range here, we started to drop out of the score into the more chopping around area. You can see the stock was basing during that period, so, and then it started to get stronger again, and we're running again. So it gives you a rough idea of how that's working. So at the moment on a SATA 8 on the weekly here. Back to here, we've got DXCM next. So earnings coming up on the 25th of April for this. It's been consolidating after making a continuation breakout attempt. So look at the weekly chart. So made a new stage 2 attempt and has been consolidating above that level. So looking for further continuation in stage 2 here at the moment. So looking for it to break out and move above. So we can also look at a weekly chart of that as well. So DXCM, so you can see it's in a weaker sector, it's in a neutral industry group and a neutral sub-industry at the moment. So it's in the healthcare equipment sub-industry, for example. So compared to the rest of its sub-industry, it's quite strong. So you can see it's at the top. It's in what we got there, sixth in its group at the moment here. So in the healthcare equipment space. So it's actually a lot stronger than the sector or the industry and the sub-industry because it's on a SATA 8 currently. So this is more of a leading stock within the sub-industry group. So you can see how this can help you in terms of looking for what we call the forest to the trees approach. So come back in here. So FSLR next. So this has been coming up in the watch list over the last few weeks. Again, the renewable energy group as a whole, the solar stocks, wind, etc., have started to look a little bit more interesting again as they've been developing base structures, with some moving in stage 1, some still in stage 4, but we're starting to see bases develop, and FSLR is a potential leader in the group, so coming right up towards its potential stage 2 breakout level. So if we get a breakout through this area here, through this 180 level, then potentially it could be starting to move into stage 2. The mantle of relative strength start to break back above the 0 line at the same point. Ideally be looking for some stronger volume if it does manage to break out. We look on the weekly chart, you can see on the stock charts version here, you can see it's just coming up towards the breakout level here. The 30-week moving average is starting to slow down here in its decline, still declining at the moment. We can look at it on the stage analysis charts as well. So you can see this is the weekly stage analysis chart. You can see mantle relative strength still below the 0 line there. It's on a neutral SATA 5 at the moment. So as I said, these are the two neutral scores here. You can see its sector is only on a 42%, so neutral, industry is 45 and sub-industry on 42. So still in a very neutral position overall at the moment. So if it does start to break, the SATA score starts to get back above that 6 to sort of 10 range there, potential for that would be potentially if it's starting to make a new stage 2 breakout attempt. The 30-week moving average would turn up, the 10-week would cross over, etc. So see how the charts can help you with that. So we come back